Hello, Tim Dyson, Chief Executive of Next 15. Thank you for checking in on our full year results, which ended for the year July 31st, 2010. I'm pleased to report that revenues were up an impressive 11% to 72.3 million. Profits were up an even more impressive 27% to 6.6 million, and adjusted earnings per share up 30% to 8.45p. These results really reflect that the group has really recovered remarkably well given the downturn that affected every part of the economy around the world around 18 months ago, and is still showing lingering impact on most of the major economies at this stage. That said, I think the group feels that it's certainly through the worst of it, and we are seeing some real organic growth in the second half of the year. We saw like-for-like revenue growth of 7.7% in terms of the second half versus the first half of the year, and that excluded acquisitions. And that kind of performance is what gives the group courage, or if you like, the optimism, to also step up the dividend by 9% to 1.85p for the year overall. During the year, we did make a number of acquisitions. We started the year with M Booth. We then made the investment in Upstream Asia, which is now Byte's Asian operation, and we increased our interest in 463. Beyond that, we also really took a very aggressive step in terms of digital. All of our businesses are fully investing in digital. We believe it's very much the future of our organization overall. This is in large part because of what you will all have seen in terms of the rise of use of social networks such as Facebook and Twitter, the amount of people blogging and so forth. The creation of a separate agency called Beyond is not really, from our perspective, a reflection of the fact that our current agencies need to do more. It is a reflection of the fact that there is always more that you can do. This is an area where we need to tackle it from every single direction. And having a firm that is solely focused on digital, I think, will give us an ability to create leadership, not just for that agency, but for all of the agencies within the group. To close, I'd really like to talk about the latest piece of news, which is that we are acquiring an 85% interest in Blue Shirt. This is our first step into the investor relations world. Blue Shirt is a technology-focused investor relations business based out of San Francisco, but with offices in New York. We are paying $3 million of initial consideration and expect to pay a further $8 million over the 4 years of their earnout. We're very excited that they'll be joining the group, and like all of our businesses, our expectation is that they will expand internationally. And this is certainly a business that we think will be synergistic with the other businesses that we have in the group. In terms of the outlook, I think we're all relatively cautious, given that that most of the economies are not racing out of this recent recession, but we're optimistic. We are seeing true organic growth coming back into the business. We're in a place where we have a strong balance sheet. We don't have any significant debt within the organization. We therefore feel we're well placed to continue to make small acquisitions, which I think we will do, but we also expect to see some pretty exciting growth coming out of the companies, especially given the investments we've been making in digital. Thank you.